Welcome, fellow investors. This video, we are looking at one of the largest companies in Australia, CSL Limited. This video will be fun. It's down 30 odd percent, well over 33% for the year. Used to be a massive stable company, paid a good dividend. This works really, really well for large companies. This one's valued as a market cap of $87 billion. So going to be a lot more effective than our Kogan video, coming in around $300 million market cap. So, with all that in mind, let's kick off. But as always, this is not financial advice, just a bit of education, entertainment, information for yourself. If you are looking to add CSL Limited to your portfolio, make sure you do your own research. Don't listen to me and jump in and get advice from a financial advisor. Starting where we always do, Simply Wall Street. I say it all the time, should get some kind of an affiliate for these guys. Or I could just teach you to do it yourself in a course where you don't need to access this. You can pull it up for different areas. Always love looking at the share price versus fair value. Discounted cash flow coming in at a 44, almost 45% discount. 325. Be interesting to see where our calculation comes in terms of that. And our historic price to earnings ratio. This is where we're starting. And it has dropped off massively this year, going down to a lowest point of 19. Highest point back in 2022 of 45, will round up to 45. Oh, it's constantly being above 40 or thereabouts. And then when was that? 2024. Last 12 months just dropped dramatically. So that's going to impact the price and the range. But we've got our information. We are going somewhere between 19 and 45. So let's fill out our paperwork. So lower price to earnings is coming in at 19. Higher price to earnings is coming in at 45. Let's go through and do some calculations on what that works out to be. So we've got 19 plus 45. It's late at night here, so I could do it in my head, but don't want to. We are coming in at 32 as our average. 32 is our average price to earnings ratio. Now let's flick over and see what we're dealing with in terms of the earnings per share. Just double check this. The industry average is 29.1, so we were thereabouts with 32. So that gives me some good confidence. These price targets are interesting. I haven't really looked at this before. Yeah. Anyway, we're focusing on what we do. So I think, yeah, earnings are going to decrease next year. Well, that's a forecast anyway. So we have got $6.20 next year. It's going in at $5.44, but there's a big upside coming in, $5.44 to $7.20. It's a 30-something% increase, and then pushing up to close to $8. So this is going to be really interesting. Multiplying those together, I think I might actually do a forecast out to 2027 and see what we come up with. But let's focus on what we've got. $5.44 is what we're aiming for. Earnings per share, let's whack it in there, $5.44. And let's go through and do our calculations. And we are going to start by doing our bottom price. So we have got 19. We're going to multiply that by $5.44. And let's call it $103, which is a massive decrease from what it is now. So that seems very unlikely that it'd get to that amount. But let's go back over and let's do the higher end. The higher end being 45 multiplied by the $5.44. We're pumping out at $245 again for the simplicity of math. $245. Quite the range. And finally, we are going to come up with our average. Just making sure I get the share screen right so you can see and work along at home. 103 is not the number that I need. We are going with our average price to earnings of 32 multiplied by $5.44, and that gives us a $174 price target, which is really, really interesting. And the reason that's interesting is at the top of the video, we said the stock was at $180. So, yeah, it's coming closer to what the average is telling us in the market. So it's actually thereabouts. But what we're going to do is have a look to see where our 100 to 245 play comes in. And I'm going to pull up some Google Finance and look at the last 12 months. So 245 is what we're aiming for, and 100 being the lower point. So 100 would be outrageous. It'd be diabolical if this went down to 100 years range, 168 to 290. So our higher end's coming at 245, and even the 174 price tag is towards the bottom end rather than an average. So really interesting times. And if we go back up and we actually have a look at this price to earnings ratio, it's probably hasn't done it justice. Where if we go this steady period, there's a few dips here and there. And then the lowest is kind of that 35. Everything else is certainly in the 40s. So that'd be a very conservative amount. So given that we're looking at an average of 174, stock's currently trading at 180. I'll let you guys calculate the rest of what's happening there. But let's do a 2027 forecast. So go back through, get to our little sheet that we're working out. Now, 2027, and we'll do it based on the average earnings per share. Average price to earnings, sorry. Price to earnings ratio 32. Let's go through and see what they're coming up with earnings per share. So the earnings per share in 2026 forecast by Seven Analyst is $7.20. Let's go $7.20. This has actually come up as US dollars, which is going to make it very fun because now we've got to convert this from US to Australian dollars. Not sure why that's happening. Pretty sure all the others have been Australian dollars, but our earnings, we look down here, earnings per share at $6.20 US dollars. So we're going to have to do some currency conversions. But since we're in the middle of it, let's do $5.44 anyway. Completing our math, so we are at $5.44 and multiplying that by what our average price to earnings was, which was 32. And again, that is not right. It is going out to the next year, $7.20. That's what I do, trying to pump out some good content. End up making a few mistakes, but we are good. We are $230 per share is sort of that 2027 average. But these are US dollars. So just going to do it for these last two. Feel free to follow along at home and do your own US currency conversion. See what we come up with. Be very, very interesting now. Let's go back over here. So United States, when we're looking at our average price was 174. So let's put 174 here. And that gives us 268. $268 is the Australian price amount. And then the previous one was 230 US dollars, which gives us 354. So this is giving a lot more upside here. In the next 12 months, I'm going to delete these because they are US based and that is going to get too confusing. Average price 268, which is a lot more appetizing, given that we are currently at that 180 mark. And going out to 2027 could be up at 354. Let's see where those numbers compare on our charts. And I think that'd be a lot more appealing, a lot more doable. 268 and 354. 268's kind of towards the higher end, but 354 haven't done that. When was the last time they were trading at that amount? That's kind of been their highest ever, is that 300 mark. So based on that information, historically, 268 is looking like a really good probable price point to aim for over the next 12 months. And as I said, Currently, we're sitting at $180 per share, so something worth having a look at and doing a bit more of your own research. As always, open to any suggestions, any companies that you want covered. Could do US stocks as well. No issue with doing that. Same methodology. Might come up with some crazy results if we get into some of the tech stocks where they're just massive price to earnings. But we're all here for fun and entertainment. So throw me your stocks and I'll add them to the list.